My name is Nicholas Owen, and today I'd like to talk a little bit about some of the recent changes that the PCAOB has made to the Standard Auditor's Report. So in October 2017, the PCAOB added some disclosure requirements regarding critical audit matters, or what are otherwise known as CAMs. So what is a critical audit matter? Critical audit matters are items that have been communicated to the audit committee or that are required to be communicated to the audit committee and that relate to accounts or disclosures that are material to the financial statements, or items that have involved especially challenging the subjective or complex auditor judgment. So I'd like to also point out that in order for an item to be considered a critical audit matter, it has to meet all three of these criteria. So what's the reasoning behind CAM disclosures? So the main reasoning behind the disclosure of critical audit matters is to provide investors with more comprehensive information for investment decisions. It gives opportunity for auditors to provide more information of value following the audit, and the fact that critical audit matters have always traditionally been discussed with clients' audit committees, but not always, they haven't always been included in the auditor's report. And so, with the PCAOB coming out and making this a mandatory disclosure, they're kind of saying, hey, if it's important enough for it to be discussed with the audit committee of the business, then it's important enough to include in the report. So what are some of the big impacts of these new disclosure requirements on large corporations and publicly traded companies? Well, 28 major companies actually are opposed to the PCAOB's, or were proposed to the PCAOB's proposal of the new standard, citing concerns that it would lead to, auditors disclosing immaterial and confidential information. They actually put together a comment letter and sent it to the SEC, arguing that audited financial statements would become a less effective means of disclosure, that it would lead to investment decision processes being less efficient, and it would have several negative consequences for public companies in general. So now that we know, what critical audit matters are, and we also know, some of the reasoning behind them, or behind the disclosure form. And then we've also taken a look at, some of the different impacts that, disclosing critical audit matters has on, large companies, and publicly traded companies in particular. Let's go over some of the other requirements that have been made along with this new requirement to disclose critical audit matters. So some of the other requirements include auditor tenure. So in the auditor's report, it is now required that you include such information, as far as the auditors that were part of the engagement team and their experience, as well as their understanding of the risk involved with the client. There's also a new requirement to include statements regarding auditor independence. This is important. You have so many scandals nowadays. It's not surprising to see some of these new requirements that want to do away with hiding information that might be harmful to the appearance or the actual audit itself. The auditor's report is now required to be addressed to both shareholders and the board of directors. There's also a requirement for standardized language qualifiers, such as the phrase, error or fraud, that is now required to be included in the report. Also, there's been some rearrangement of some sections and titles. So here are my sources. If you have any questions regarding the presentation, you're welcome to email me. My email is up here in the top left-hand corner. So have a good day.